Welcome back to GoldSeek TV. I'm Peter Spina, the president of GoldSeek.com, here in Zurich at the European Gold Forum with the president and CEO of Fortuna Silver, Jorge Ganoza. Thank you for joining us here.
Peter, a pleasure to be here again.
It's great to see you here in person. We're here at the Zurich conference as the gold price is breaking through an important $2,000 an ounce barrier. Silver is moving above $25 an ounce. How are you finding the sentiment and how are you seeing interest from investors?
Improving. We had good meetings in these 2 days of the conference. I think there is still a lot of room to go with respect to general market interest on mining equities, and let's hope that this move in precious metals that we're seeing supports that, right?
Right. Still feels like the early stages, a stealth move in the precious metals market.
Yeah, it certainly feels like that, no? I think we need to see a bit more conviction on the move, and consolidation above $2,000. Silver is starting to show some life, outperforming gold a bit these past days, closing that gap with gold. But still early days, seems like, no?
It does.
Yeah.
It really feels kind of more like a bottom of a gold market versus one where you go to a conference where you're elbow to elbow, people are just scrambling to find opportunities.
No, we are not there yet.
No.
We are not there yet.
And speaking about opportunities, Fortuna Silver is very close to starting its 5th gold mine. And this morning you put out results for the production numbers, but you also had some interesting news in there that Séguéla is going to be coming online next month already, its first gold production. So if you could give us a little more of an update at Séguéla and what investors should expect with production.
Yes, and talking just about gold price and our expectations on higher prices, but really what we control is what we can do in our mines, the type of assets we can focus on, the costs at which we run our mines, and the projects we decide to develop, right? So that's what at Fortuna we like to focus on. And as you said, for Q1 we just put out our results, and we produced 1.5 million ounces of silver and some 60,000 ounces of gold in the first quarter, very much in line with what we guided for 2023 to the market. And more importantly and exciting to us is that in that same news release we are informing of the status of our Séguéla project in the Ivory Coast, Côte d'Ivoire. Séguéla is right at the verge of producing first gold. We made the construction decision at Séguéla in September of 2021. So it's been, a year and 8 months of hard work to deliver Séguéla, and we're about to start harvesting, right? So first goal, we are on track to achieve that in this coming month of May.
Fantastic. So how does the gold production look like as Séguéla comes online? How you went from 60,000 ounces a quarter. This last quarter, how is it going to look?
We have guided the market that we'll produce in 2023 around 440,000, 450,000 ounces of gold. That would represent about a 10% increase, 10-12% increase with respect to what we produced in 2022. And the driver for that growth is Séguéla, coming online and contributing in the second half of the year. So we expect 60,000 to 75,000 ounces of gold in the second half of the year out of that mine. But more importantly, and a very competitive all-in sustaining cost. Now we have provided guidance on cost as well for Séguéla, and we have guided between $880 to $1,080 per ounce all-in sustaining cost.
So that's well below the industry average.
Yeah.
What makes it a low-cost mine? What allows you to mine this gold at a lower cost? The grades?
There Yeah, there are several features of the Séguéla deposit. One is great, no, it's a high-grade open pit operation, right? For the audience, the average grade of Nevada open pits, it's around half a gram or below half a gram of gold per ton. The average grade of West African gold deposits is about 1.2, 1.5 grams per ton gold. Séguéla is 2.6 grams per ton gold on the average of the reserve, right?
Very rich.
So it's a high-grade open pit mining, conventional metallurgy. It's sweet ore, we would say in mining. We'll call that type of ore sweet ore. Is very amenable to conventional processing. And the Ivory Coast is a good mining jurisdiction with a lot of service providers and all the necessary industry clusters to be effective and efficient and productive in advancing a new mine, right? The expansion of mining in that part of the world has helped develop good, robust mining service providers. So there is a very competitive environment for services and equipment and support for a mine, right?
That's fantastic. And this project continues to grow and develop. The size of it, you have multiple deposits in this area with is it Sunbird the most exciting one right now that you are working on? If you could tell us more.
It is worth to remember that 3 years ago, Séguéla was a 400,000 ounce deposit. You know, only 36 months ago was a small 400,000 ounces in inventories. Today, in total inventories, we have close to 2 million ounces of gold. Considering Séguéla, which is the newest discovery. Sunbird. So Séguéla is composed of 5 mineral deposits in the reserve, plus the 6th one, Sunbird, which is currently being infill drilled to incorporate it into the reserve. So expectation is by mid-year, we'll have 6 deposits now in the reserve. So we have Boulder, Ancien, Kula, Agouti, and now coming Sunbird, right?
So this trend is very rich. You're finding new deposits there. What do you think the prospects are of even expanding beyond this current success?
At Séguéla, we have a commanding land position. Let's say we have a lot of room to play in a most prospective belt. So we currently have 3 drill rigs turning. What you see when companies go into a construction mode at a mine site, you usually slow down exploration. So you can focus your energy, your attention, management's attention, and your financial resources towards the build. But we decided to continue with the drill bit and exploring at Séguéla while we were building, just because of the nature of the high value opportunities that we have at Séguéla. So parallel to the construction, we continued exploring aggressively. Today we have 3 drill rigs turning at Séguéla, and we continue finding stuff. And I invite you to look at our latest exploration news release of some weeks ago, where we show that we have new prospects emerging, Badior, Barana, up in the northern end of the property with high-grade gold intercepts or respectable widths. So, we are very bullish on the opportunity and optionality that we have to continue growing reserves and resources.
Fantastic. It's a very exciting area to be. Mining gold now, West Africa has become a very important region for the major gold mining companies to add more ounces and to develop their reserves. So if you could give us a little more insight again on West Africa, because it is becoming more and more recognized as a very important part of the gold mining industry to be in.
Yes, West Africa has emerged over the last 20 years as a good mining jurisdiction, and just look who's in the neighborhood, right? You have Barrick now, Newmont, Anglo, Endeavor Mining, B2 Gold, and several other companies with excellent projects. So it's not just that the endowment, the mineral endowment, is that in spite of some political turmoil and even security risks, the host nations do favor mining, and it's a place where you can get permitted quickly. You can achieve low costs of production. As I mentioned before, you have all these services, service providers, equipment manufacturers well represented in the area. So it lends itself to operate and be effective in developing mines and advancing the business.
So Fortuna is in 5 different countries, 5 different mines, soon to be the 5th mine. Let's talk about some of the other projects and other mines. Lindero is one of your other big gold mines and projects. In your updated resources and reserves, recently you had added another a maiden resource on one of the satellite deposits at Lindero. If you could talk about it.
At Lindero we have it's a mine that's been in production. Its first full year of production was 2021. 2022 has been its second full year of production. It's a new mine basically for us. It's a gold porphyry. It's a different type of animal compared to Séguéla or the geology of our other mines. No, this is a large copper gold porphyry, gold-copper porphyry. We have about 100 million tons in reserves. And 3.5 kilometers away from the Lindero porphyry, we have the Arizaro gold-copper porphyry as well. So it's a target that we have always recognized as important. But in this particular case, our focus was revolved around getting Lindero into production, stable into production. We built this mine through the worst of COVID. Yeah. That mine was coming to the end of construction when COVID set in March of 2020. Yeah. So, ramping up the mine and getting it stable was a challenge. But we're there now, and so with the mine more stable, we're starting to move into the exploration front there. And we published our first resource at Arizaro. There's still lots of work to do, but speaks about the opportunities that we have in that camp, right?
Quite perspective and a lot of options and targets to work on.
Yeah.
So what is the size now, the production size of Lindero? It's over 100,000.
Lindero in 2022 produced about 118,000 ounces of gold. Mm-hmm. For this year, it's going to produce around 100,000 ounces. Yeah. Okay. Last year, all-in sustaining cost was about $1,100, so very competitive all-in sustaining cost. This year, we have some large capex projects. We're expanding the leach pad. So from the all-in sustaining perspective, our cost this year is guided to be higher, more in the range of $1,400. But, still a very good mine with a long life of reserves, right?
Yeah. You are known to be a lower cost producer from the mine that I originally followed when I became an investor in Fortuna many years ago in the San Jose project in southern Mexico, where you have very low all-in sustaining costs, and it seems to be kind of your strategy to find these kind of deposits that you can mine, even when the gold and silver prices are not the most favorable to miners, but it allows Fortuna to still operate and be successful in difficult environments. That seems to be kind of Fortuna's.
We try to be as agnostic as we can on our view on prices, because our mines need to perform throughout the precious metals price cycle, right? That's the way we can provide good returns on capital and optionality to our investors if we have mines that can perform throughout the precious metals price cycle. Fortuna now is close to 18, 17 years old, and all the mines that we have brought into production still operating today, right? So that means that we made the right choices, and we bring mines that we believe can perform in stressed price scenarios, and again, that's what would give investors optionality and the opportunity to achieve improved returns on capital.
So you try to protect your investors on the downside. And we've been focused a lot on weak metal prices over the last decade, but now, as in my view, we're entering a new cycle where gold and silver prices could do quite well. So let's maybe look at some potential here. If gold and silver really had a big breakout move, if gold goes to 2,500 or even higher, if silver goes to 30 and beyond, what does that do to the company? What would you do with all this additional new cash flow, and would you be looking at potentially in the future at a dividend, or what would you do with?
Return to shareholders is a topical issue for us. Fortuna does not have a dividend policy in place right now because over the last years we've been investing in growing our asset base. To me, to institute a dividend or a means to return to shareholders, you need to meet two criteria. It has to be meaningful and sustainable, right? So to do that, you need, in this business, an asset base that allows you to have that predictability on the returns, and that is life of reserves. If you look at the evolution of Fortuna back 10, 12 years ago, our assets were very profitable, but with short life of reserves. So what that means is that we are constantly having to invest heavily on mine life, be it through exploration, expansion, or new acquisitions. So we've been migrating to a different type of asset. And we were talking about Lindero being a gold copper porphyry with 100 million tons, predictable, and over 10 years, over a decade in reserves. Séguéla has over a decade in reserves right now. Looking at what we have in reserves and the new deposit Sunbird, you can project the life of mine at Séguéla for over a decade. Caylloma is looking 10 years now. So with that type of horizon on the reserves and life of mine projections, we can start talking about a predictable, sustainable, and meaningful return to our shareholders, right? But when you have mines that are running out of reserves in 3 years, guess where your capital goes to, right?
Well, that's going to become it's a big challenge for a lot of mining companies, especially in this difficult price environment we've been living through for the last many years. So now with the prices becoming more favorable, this hopefully allows companies like Fortuna to now add cash to the balance sheet, get in a stronger financial position, and as you're saying, now you have a nice floor to work from. You have a nice asset base and long life mines. And now you won't be required as much to commit as much capital to expand the mine lives if you already have, I guess, these targets. But you do have a lot of potential to add value through exploration, whether that's in the Lindero area and Séguéla.
Capital allocation priorities first. We are not a highly leveraged company, but we do have debt, and our debt to EBITDA ratio today hovers around 0.6. So we will be bringing down our debt level. We'll always carry some level of structural debt, but we'll certainly lower it down. I believe a mining company should take times of higher prices to ensure you have a fortress balance sheet rather than take on more. So it's time to do that, get in place a fortress balance sheet, and then exploration, that's always very accretive to value, and then return to shareholders. And any additional opportunity on the M&A front or whatever would have to be paired against or returning capital to shareholders. But you can do that now from a base of long life of reserves. When you're talking about a mine running out in 3 years or 4 or whatever, as your responsibility there becomes reserve replacement and expansion of life of mine.
Right. Yeah, it's a challenging business, but when you have the right assets, it can turn into a very profitable and you can really now transform the company into like you said, a fortress where you can reduce the debt, improve the balance sheet, which I would imagine would bring re-ratings from some of the analysts, especially now with more profitable production coming online.
Yeah, I think what we all want to see is at times like these, companies really being able to generate free cash flow, no? And hopefully that cash flow comes from reserves that give you predictability and sustainability over time, no? So long life of reserves, good cash flowing assets with long life of reserves. That's what will deliver value for the investor.
Fantastic. Well, Jorge, thank you very much for your time and insights. Congratulations on Séguéla, the first gold pour coming soon. That's very exciting, very soon, and continued success from exploration. Looks to be a big value driver for shareholders on top of the expanding production. So there's a lot going on in Fortuna right now. So we're looking forward to these next big milestones, and of course, if we get a nice gold and silver market helping us out, boy, things could get quite interesting and exciting again for gold and silver mining investors. So good luck with the initial production in Séguéla, and look forward to following up and seeing continued success.
Stay tuned. It's very exciting. This is going to be a very exciting new mine for us in the portfolio. So stay tuned.
Great. Look forward to it. Thank you.